Hey, it's Clay at claytrader.com. On the screen here, you see some of my recent day trading results, and I show this to you because I want you to know that what I talk about here and how to make your day trading easier, and it can be day trading, it can be swing trading, it could be stocks or futures or cryptos or options, any type of trading you can make easier with a strategy that is definitely proven. And when I say proven strategy, I mean that in a literal sense. So none of this that I'm going to be talking about is theory. It's actually happened, and it's happened multiple times, and this is just one example of it that really illustrates this, we'll call it mind trick that you can use on yourself that in the big picture is going to make your results easier to obtain. It's going to make making money easier, and now it's not like all of a sudden you're going to be a multimillionaire, but you're going to notice if you do it, your money starts to add up. Your gain starts to add up. Your consistency starts to add up. So let's just first start with the facts. And looking at these results, the fact is it's easy to do this. It is easy to win. You could blindfold a monkey, spin him around, give him a dart, and the monkey could still potentially hit a bullseye. The monkey could be even drunk. So a drunk monkey who's blindfolded, you spin him around and dizzy, can still throw and hit the board. Maybe even get the bullseye. Winning in the market is not hard. Making money in the market is not hard. The hard part is this right there. The hard part is actually taking a loss. And the reason for that is we have ingrained in ourselves as human beings this mentality of, never give up, never surrender. And it's in many cases in life, that's fantastic. That's basically the perfect attitude to have. No, I'm never going to give up. I'm never going to surrender. But in the world of trading, whether we're talking day trading or swing trading, that's a terrible, terrible attitude to have. Is you don't want to show up and say, I will never give up, I will never surrender. And that's what causes people a whole lot of problems. Now, Captain Obvious is going to stop by real quick. No one enjoys losing, right? Especially when it means you are literally losing money. So if you lose money, not exactly a great way to lose. I mean, it's one thing where you lose your keys for a little bit. Nobody likes that. That's annoying. But losing money, yeah, a lot of worse. Now, first off, I'm not a psychologist or anything like that. All I can do is speak from personal experience and speak from little lessons and little tips and tricks that I've developed for myself, over the decade now that I think about it. I've been in the markets for quite a while. But why is it so hard? What do we have against losing? I mean, where does this all come from? So looking at the dictionary, I think this is a good way to go about it, but there's several definitions out there, and I'm not going to read them, but let's just focus on some of these words within the multiple definitions of what it is to lose, what a loss is. So one, little or no. I mean, what does your mind associate with that at the surface? Now, of course, I realize with each one of these, you could sit there and deeply think about it and probably rearrange in a positive way. But just on the surface, what does your mind think when you hear little or no? That's got a negative connotation, right? Little or no? Oh, that's not good, right? How about this one? Fail. What does your mind think when you hear fail? My mind at least thinks not positive things. Fail. How about this definition? Suffer. Deprivation. Again, what do those words on the surface just make you think of automatically? So of those emotions out there, what do all of those words make your mind go to? That one, right? Which makes you totally normal. It doesn't, in fact, I would argue if you hear fail and suffer and deprivation and it causes you to rejoice or have a smiley face, in that case, you are actually not normal. You should probably head to a psychologist. That's not the emotion you should be feeling with all those different words. But because we're human beings and because that's just how the mind works, then yeah, you see all those words. And again, what are all those words associated with? Well, the idea of a loss, the idea of losing. So then the problem is made much worse because in the world of trading and risk management, there is this, an order called the stop loss. If you've been around for a while, I'm sure you've heard of it. Now, practically speaking, fantastic. It's awesome. It is a great order to have. It is probably the most important order to have. You got to use a stop loss. You got to use risk management and a stop loss is a means by which you can, apply good risk management, skills, good risk management habits within the market. So this is not me bashing the stop loss because, again, practically speaking, to give full credit where credit's due, it is a great order type. You should definitely be using it. However, mentally, what's going on here? Well, mentally, what's it called? A stop loss. Loss. What did we just do with the previous? Looking at all those in the previous slide, all those definitions. Think about all the negative connotations that are built around loss. That on the surface, loss, fail. I mean, what a brutal word. Deprivation. I mean, that's not going to be good from the mental standpoint. And that's why a lot of people have a very, very hard time taking a loss, because sure, it is a loss of money, but even more, the human mind, it causes those emotions. It makes, I'm a failure as a trader. That I'm going to have little or no. All those negative words, they're creeping up in your mind, and you're just, well, let's just get this to the winning trade. And that way, well, it's a winning trade. It's not a loss at all. So people don't want to admit that it's a loss. Very, very tricky situation to have. And my solution is just be honest. Be honest with what is actually happening. Be honest with what is, and I'm going to, like I said, no theory. I will prove all this out with a trade, but just look at it the right way and look at it the honest way. So the traditional understanding is this, right? A stop loss puts an end to losing money. So, hey, you know what? A stop loss order is there that you can just put an end to losing money. Nothing, that's just the way it works. That's the traditional understanding. And I should note that is the correct understanding. That is true. A stop loss does put an end to the losing of money. My understanding, though, is you begin to make money. Let me say that again. The stop loss and what is actually happening. This is the truth here, and why I would argue that it should, is from the get-go, from the beginning, whoever invented these terms, it should have been called this, what I'm about to tell you. But in my mind, you begin to make money. And it's all based on this principle. One of my favorite quotes, Benjamin Franklin, a penny saved is a penny earned. So what do I mean? Well, it's not a stop loss. What I call it is a start save. And in my mind, it's a start save. It's not a stop loss. Now, of course, if I communicate with other people, I'll use stop loss because start save is clearly not is not a term that's universally accepted within the world of trading. So you can't quite go and just start using start save. But in my mind, it is called a start save because, again, why? Well, if you save a penny, if you save any amount of money, that's the same as earning it because it's still in your pocket. And when money is still in your pocket as opposed to the alternative of being gone, well, the very act of keeping it in your pocket is essentially a job in and of itself, right? You just earned income. What was the job? Well, the job was you keeping that penny in your pocket, was you keeping money in your pocket. That was the job. That was the skill that you deployed that ultimately gave you money, that helped you earn money. So look at it like that is when you save, to save, it's a verb, right? So when you are saving, there is the act of just simply keeping money in your pocket, avoiding losing money. And when you can keep money in your pocket, that's just like going to a job and making money because you're putting money in your pocket. In this situation, you're keeping money in your pocket as opposed to losing it. And that's powerful. So that's why I say, and in my mind, that start save is a little tricky. If you start to adapt and if you start to look at all of this, it makes making money easier. Your results are going to improve because it's going to help you, hopefully by the end of this, just make stop losses easier to accept, easier to deploy in the real world of trading. And when you actually stop and manage risk, guess what? Over time, you're going to be making more money. You're going to be making more money over time because, well, you're saving money. And a penny saved is a penny earned. So how the start save works. Once again, no theory here. So let's focus on that loss that I have and walk through that. So this is where the details of the trade, but the main point to look at, and I'm not sure if you'll be able to see that, especially if you're on a mobile. So right there, what I'm highlighting is of ticker symbol BYND. I bought 500 shares at a price of $75.43. So that's the premise. 500 shares purchased at $75.43. So here's where I bought as far as the chart is concerned. And then let's look at the rest of the, the execution information. And mainly right there, that highlighted part, which shows where I began to sell. And I ultimately sold 500 shares of 74.65-ish. I say ish because you have commissions in there. And, it wasn't exactly because it was, there was partial fills at different levels, but right around that area. It's close enough to illustrate the example here. But yeah, right around 74.65-ish is where I ultimately sold. And that is represented right there on the chart. And that did lead to that loss that you've already seen of the $378.60. So how the start save works here. How is this going to help us? How does this actually play out in the real world of trading? Well, 378, that's the start point. The start point of what? Well, the start point of where you start saving money. So any amount above this number is the money that you avoided losing. Now, I get it. You can say, well, Clay, that's a negative number. So don't look too deep into the math, okay? Just understand that anything higher than 378 from the loss side, that is money that you have avoided losing. And what's another word for avoided losing? Well, saving. So anything above that 378 is savings, is money that I have avoided losing by just selling where I decided to sell. So I decided to take the loss, decided to sell right there, or in other words, I decided to start saving. So let's see how this played out. So that's where I sold, like I said, and then eventually all of this occurred. So from that point, the price ultimately went down to $72.75, which created a potential loss, potential being the key word, of my entry price minus where I could have potentially sold, and that would give a loss of $268 per share. And then because I had 500 shares and because I lost $2.68 per share, total loss of $13.49. That's a potential. But what was my actual starting point? Where did I start as far as the saving was concerned? Well, the 378. So in other words, what was the avoided loss? How much did I save? Well, the potential was $13.49 that I could have lost, right? But I only lost the 378. So in other words, I earned myself, because I saved $970. Booyah. That is powerful stuff. That is why you need to look at this in more of a positive light, that you're not stopping a loss. You are starting to make money. Because when you start saving, that means you're avoiding. And when you're avoiding losing even more money, that is the very act of saving. And a penny saved is a penny earned. $970. Let's look at this another way. So here are my total results for that day. You can see in the bottom right-hand corner there, $759. But let's just say, again, that I was undisciplined, or that, I don't want to, it's a loss. No, that I was just, no, I'm going to start saving money right now. So if I had not done that, that would have been, as we just went through the math, $13.49. So the question now becomes, all right, well, how would that have affected my overall day? That one decision to see the word loss and all of that affect my mind, as opposed to just saying, you know what, no, I want to start earning money here. I want to start to save money. Well, and that's if I would not have done that, if I would have just been on the undisciplined route, the route that I'm sure many of you have been before. I've done it before also. So it's not like I say this from I'm perfect and I've never done any of this. No, I trust me, I've done it. But what would that have done? That would have made my overall results negative 205. In other words, I would have gone, because of that one decision, I would have gone from having 759 in my pocket to having 205 taken from my pocket. That's crazy. That's how nightmares are built. That's how you not being happy with yourself are built at all. Because think about how much worse that actually is. Had you not just started to save money at that point in time. That's a big swing, right? And it's because if you look at it as, you know what, I'm actually earning money by being disciplined, that is the truth. Like I said, you got to be honest with yourself. That's exactly what it is. once more, I would love to petition and say, hey, can we change this thing from a stop loss to a start save? Because technically speaking, a penny saved is a penny earned, and maybe I could give this very presentation. I'd love to have that change, because just that little rewiring of your brain can take you a long, long way and make making money easier. Because here, like I said, I still walked away with $759, but had I just one choice, been undisciplined because of that word loss, and because I don't want to take the loss, because that means I failed, and that means all those negative words. Had I done that, I would have lost $205. So yes, in the big picture, it does make making money easier. And this is proven. This is not some sort of theoretical strategy. When you keep your losses minimum, when you keep your risk under control within the grand scheme, you're going to make that much more money as it adds up quicker and quicker, just simply via the whole idea of a penny saved is a penny earned. The very act of saving money is like a job, because when you're saving that, yeah, you're avoiding losing it. And that's very powerful. And like I said, adds up in the big picture. So if you enjoyed this video, a couple things before I leave. First off, please hit that like button and check out the channel as a whole. I'd love to have you subscribe, and there's lots of other content on the video. There's live trades, there's other videos such as this, and there's a good variety, so check out the channel, and hope you decide to hit that subscribe button. But if anything, just hit that like button. Also, leave a comment down below. I don't know, hashtag start save. Let me put it this way. If you've made it this far, at minimum, I mean, of course, you can ask other questions and comments, but give me a hashtag start save in the comment section. Maybe we can start a revolution here and have this start save instead of a stop loss catch on. But to me, that's the name of the game. We got to start to trick our minds, rewire our brains. And for me, at least, it all starts with the start save. So comment down below if you've made it this far, hashtag start save. And if you're interested in learning more about what I have to offer at the site, I do offer a community, and there's a live chat room, and there's a newsletter and stuff like that. I think you can go to claytrader.com/team to learn more about that. But if nothing else, just hit that like button, leave the start save comment down below, and hopefully you decide to ultimately subscribe to the channel. Thanks for hanging out. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up, as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.